when you see a stock that has plummeted from a peak of $57 down to 13, but suddenly flashes a technical buy signal and is sitting on over $1 billion in cash, are you looking at a massively undervalued opportunity or a dangerous value trap?
Oh, man, that is like the ultimate puzzle in the market right
It
now.
really is.
Because on the surface, the chart looks like total capitulation. But the balance sheet beneath it, well, it's structured to weather a very specific, very expensive storm.
Right. And welcome to the deep dive, everyone. Our mission today is to just completely dissect the financials, the technicals, and, the intense market debate surrounding NuScale Power Corp.
Ticker symbol SMR.
Exactly, SMR. We're looking under the hood today to figure out what is really driving the crazy volatility here. But quick reminder before we jump in, this is an educational deep dive.
Right, not financial advice.
Never financial advice. We're just looking at the source material, dissecting the info so you can understand the market dynamics. Always do your own research. And hey, please take a second to like the video and subscribe to the YouTube channel.
Yeah, that helps us out a lot.
It really does. And it's absolutely compulsory that you leave your feedback in the comments. We want to know what you think because, well, understanding multiple perspectives is what this show is all about.
For sure. So to set the baseline for you guys listening today is April 21st, 2026.
Yep.
SMR is currently trading around $13.22.
Which is showing a bit of a daily pop recently, right?
Yeah, up about 4.51%. But, I mean, context is everything here. This was a stock riding incredible momentum back in 2025.
Oh, yeah, hitting highs of $57.42.
Exactly. So the drop-off since then has been pretty brutal.
Okay, let's unpack this. Because before we even get into their actual business model, the technical battleground here is just, it's fascinating.
It really is a tug of war right now.
Right, like we have to read the vital signs of the recent price action.
Right.
So looking at the moving averages, they've suffered this prolonged downtrend, but right now they're actually trading above their 50-day moving average.
Which is sitting at $12.27.
Right. So that shows some short-term strength.
Right.
Buyers are stepping in.
Yeah, and this is but it remains well below the 200-day moving average.
Way below. That's up at $26.87.
Exactly. Which just confirms the long-term weakness is still very much in play.
So you've got short-term buyers fighting long-term exhaustion. And let's talk support and resistance because the 52-week low is all the way down at $8.85.
Ouch.
Yeah. But there seems to be this psychological support holding around $11.50.
That's right. And the crucial resistance zone that traders are watching right now is between $12.60 up to $12.90.
So 13.22 today, they're testing a breakout.
Exactly. A sustained break above $12.90 is like the positive reversal signal everyone is waiting for.
And the momentum indicators are kind of backing that up, aren't they?
They are. The RSI, the Relative Strength Index, is up at 66.20.
So nearing overbought, but showing positive divergence.
Right. And the MACD sits at 0.76, which means it's officially flashing a buy signal for near-term momentum.
Okay, so I look at all these technicals trying to push upward, and I think of, like, a marathon runner who just collapsed midway through the race.
That's a good way to put it.
Right, like they fell from 57 down to $8, and now they're just desperately trying to get back on their feet.
Sweating, shaking.
Exactly. The technical indicators like MACD are flashing buy signals, so there's a pulse.
Yeah.
But my question is, how much of this is real fundamental strength versus just, a dead cat bounce?
Well, what's fascinating here is the volume. If this was just retail noise, you'd see low volume. But volume has absolutely exploded.
Really? How much?
We're talking over 54 million shares traded recently.
Wow.
Yeah, compared to their historical average of like 26 million.
So double the average volume.
Exactly. That is not just guys in their basement trading on an app.
Yeah.
That signals major institutional interest and, frankly, extreme volatility at these levels.
Right. Big money is moving around. So that naturally leads to the big question.
Yeah.
If institutional money is driving 54 million shares of volume, what exactly are they buying?
Right. We have to peek under the hood, transition from the chart to the actual financial reality check.
And here's where it gets really interesting. I was digging into their income statement, and, well, it's a tough picture.
That's putting it mildly.
Yeah. Full year 2025, total revenue was only $31.48 million.
Which is down 14.9% year over year.
Right. A public infrastructure company with shrinking revenue. And net income was a massive loss of negative $355.79 million.
And a lot of that was due to, like, non-cash milestone recognition, but still.
Still a huge number. And then you look at operating income, deeply negative, at negative $689.57 million.
Nearly $700 million burned just on heavy R&D and general admin costs.
Which gives us a trailing 12-month EPS earnings per share of negative $2.17.
Yeah, it is bleeding cash.
But then, and this is the crazy part, you look at the balance sheet.
This is the critical strength right here.
It's absurd. NuScale is sitting on $1.3 billion in cash and liquidity.
Up a staggering 194% year over year.
How do you even do that while losing $700 million?
Well, they executed a $750 million share sale.
So heavily diluting the existing shareholders to build that war chest.
Exactly. But it worked. Total assets are now $1.41 billion.
And their total liabilities are relatively low, right?
Yeah, only $298.96 million.
Okay, so I'm trying to wrap my head around this. How can a company with a negative $689 million operating income and revenue that's actually dropping be a viable business?
It's a great question.
I mean, is this like a startup burning through venture capital? Like, is this a sinking ship or a rocket ship that's just incredibly expensive to fuel?
It's the rocket ship scenario, or at least that's what management is trying to build. You have to understand the why here.
Okay, explain the why.
NuScale is in this highly expensive, deeply complex transition phase. They are moving from pure R&D into commercialization.
Right, because they're building small modular nuclear reactors.
Exactly, SMRs. They are a pre-profit company. The $1.3 billion in cash isn't just a nice buffer. It's a deliberate 2 to 3 year operational runway.
So it buys them time.
Yes. It is their biggest structural advantage right now. Without that cash, they'd be dead in the water.
Okay, so if they have this massive cash runway, but terrible current earnings, who is actually betting on or against this stock right now? Let's look at the players.
Good idea. Let's start with Wall Street. The consensus right now is sitting somewhere between a hold and a moderate buy.
But the price targets are all over the place, right?
Oh, completely scattered. The average target is 17.39. But you have this massive spread between a super bullish $52 and a bearish stonish.
That just screams uncertainty.
Totally. And the big banks, they're playing it safe. UBS is a target of 13, Goldman Sachs is at 17, and Citigroup is down at 11.50.
So they are currently neutral to bearish.
Yeah, they aren't willing to stick their necks out on the commercialization timeline just yet.
And it's not just the analysts. I mean, look at the insider activity. A major shareholder, Fluor, was noted selling stock in late 2025.
Yeah, and Fluor isn't just any investor. They're a massive engineering partner.
Right. So when your main engineering partner is selling off shares, that weighs heavily on market sentiment.
It's a huge psychological anchor on the stock. It makes people wonder what Fluor sees behind the scenes.
Which brings us to the short sellers. Because short interest is incredibly high right now.
Yeah, it's hovering around 20.19% of the float.
So 1/5 of all available shares are sold short. Now, if I'm a retail trader listening to this and I look at that 20% short interest, I might be dreaming of a massive short squeeze.
Oh, absolutely. Retail loves a high short interest.
Right. They think one good press release and this thing rockets to the moon. But why do retail traders often get trapped here?
Because they misread who is actually on the other side of that trade. You have to look at the downside risks.
Okay, walk me through that.
When you have insiders like Fluor selling and big banks like Goldman and Citi issuing neutral or bearish ratings, that 20% short interest isn't just an opportunity.
It's a warning sign.
It's a massive red flag. It signals that smart money is actively betting against the company's near-term execution.
Wow. So they're betting the cash burn will catch up to them before the revenue hits.
Exactly. And if retail jumps in just hoping for a squeeze, they often end up holding the bag when the institutional shorts just comfortably wait out the cash burn.
That is a brutal reality check.
Okay.
So bringing together the technicals, the financials, and this market sentiment, we arrive at the ultimate debate.
The bull versus the bear. Undervalued versus value trap.
Right. So let's lay it out. Give me the best case recovery scenario, the bull case.
Okay, the bull case is actually really compelling. NuScale is the only U.S. company with a fully certified small modular reactor design from the NRC.
The Nuclear Regulatory Commission.
Yes, that certification is a massive, massive moat.
Because it takes years and billions of dollars to get.
Exactly. And they are perfectly positioned to meet the insane energy demands coming from AI data centers.
Oh, right, because AI needs massive 24/7 baseload power that wind and solar just can't provide reliably.
Precisely. And the bulls say, look, they have the 1.3 billion in cash to just comfortably survive until those massive AI deals materialize.
Okay, I see it. But what about the worst case continuation lower? The bear case?
The bear case is all about commercial uncertainty. Right now, there are no binding power purchase agreements. Zero.
Wait, really? No binding PPAs at all?
None for key projects.
You
And
know,
you can't finance a nuclear plant on hopes and dreams. You need a signed contract showing who's buying the power.
so without those PPAs, the certification doesn't actually generate cash.
Right. And then the bears look at the valuation. They're sitting at a $4 billion market cap on just 31 million in shrinking revenue.
That is a tough pill to swallow.
It's highly questionable. Plus, there are ongoing securities fraud class action lawsuits.
Right, regarding their partnership disclosures. And let me just jump in here to make a quick neutrality note for you listening.
Good call.
We are just neutrally presenting the facts of these lawsuits based on the source material.
Exactly. We take absolutely no side on the claims whatsoever.
Right, we're merely reporting the ongoing litigation risks. But as an investor, you have to acknowledge that unresolved lawsuits create a legal overhang.
Institutions hate uncertainty, and lawsuits are the definition of uncertainty.
So what does this all mean? I'm trying to wrap this up in a neat little bow. Is investing in NuScale right now like holding the only winning lottery ticket legally printed by the government?
Yes, that's exactly it.
The drawing isn't for another 3 years.
Right. And you have to pay $700 million a year just to hold on to the ticket.
Man, that's stressful. So let's look at the outlook. When will the market actually decide which side of this debate is right?
Well, short-term perspective first. Extreme volatility is pretty much guaranteed.
Especially around earnings, right?
Yeah, the immediate hurdle is their upcoming earnings call on May 7th, 2026.
What are traders going to be looking for there? Because we already know the revenue is bad.
They'll be watching the chart to see if the stock can maintain its hold above that crucial 50-day moving average.
So defending that 12.27 level.
Exactly. If management sounds shaky and it drops below that, it could get ugly fast.
And what about the long-term perspective?
The survival and recovery of this stock depend entirely on one thing: securing master service agreements with tech hyperscalers.
The Amazons, the Googles, the Microsofts.
Yes. If we connect this to the bigger picture, that $1.3 billion cash runway is totally useless if they can't convert their NRC certification into actual binding revenue from big tech.
Right. And if they fail to sign binding deals in 2026,
Then you're looking at severe price erosion.
Yeah.
Or worse, further stock dilution to raise more cash.
just brutal. Okay, so let's quickly summarize this for you guys before we wrap up.
Sure.
SMR has a technically improving chart, right? And a massive, massive cash pile.
Yeah, 1.3 billion.
But it is battling some serious headwinds. Insider selling from floor, zero binding PPAs, a $700 million cash burn, and legal overhang.
It is the ultimate high-stakes waiting game. You have to think critically about their timeline and the execution risks.
Absolutely. And as a final reminder, this deep dive was purely for educational purposes. We're just looking at the facts, not telling you what to buy or sell.
Stay smart out there. Do your homework.
Always. Thank you so much for joining the conversation today. But before you go, I want to leave you with one final provocative thought to mull over.
Oh, I like this. What is it?
Well, we know AI data centers are truly desperate for power, right?
Desperate.
And we know NuScale is the only U.S. company with a certified SMR design.
A total monopoly on the tech right now.
Right. So why haven't the tech giants signed binding agreements yet? What do they see behind closed doors that we don't?
That is the billion-dollar question.
It really is. Think about that one. We'll see you next time.